Well, it's been a bit of a quiet week so far. Everything's waiting on inflation news. So I haven't really been doing that much in the market. When the market's been on the boil, I just really let my underlying portfolio do the work, and I sit back and wait for where it looks like it's going to have a pullback. This is the S&P 500. It's going back weekly. So you can see we really are still at the very pointy end here. And I guess on a big scale, I guess you could argue there's some negative divergence going on here. With that high and that strength, that high, that strength. But I don't think I'd go that far. That's probably pushing it. On the monthlies, though, it's a little bit more clearly. We're certainly not as strong as before. So I still think we're still pretty extended, and I guess similar to what was going on, back here. When we look at, let's see how this lines up. Back here leading up to the old .com disaster. So if we line up the lower end, ka-ching, ka-ching, and ka-ching, and then the top one to there and there, we can see that there was certainly, depending on how you measure it, it either got to the top of the channel, right to the top of the channel, hugged it for a little bit and tanked, or broke through. In any case, there was a big run up to the top. Big run up to the top there. We're certainly looking very, very pointy there. As far as where we are on this one, like it's, these are the candles. See, this top line really has had a fair bit of attention over time. It can hug it for a while. It can bounce off it pretty quickly. It can have a couple of stabs. I guess this one's probably a bit more similar, where it went pretty quickly from the bottom up to the top. It has had a couple of goes here. Anyway, we will see. When I look at the daily, let's get rid of this. Let's get that. Take it off the log scale. When I look at it, I guess my first impressions are still, look, there still is that line which was kind of broken. There is still that argument saying, well, that's the trend that we're looking at now, and there's a parallel channel above it, like kind of there-ish. So we still could have a little bit of way to go, up to, like, say, 4,800. And that would be a pullback. Level 45.45, and one through here, which is 42.50-ish. They're the levels that I would have in mind for it to pull back to. The targets, we're pretty healthily overbought on the dailies. The last time we had that happen as strong was here, and before that, here. There was one in here, right? And really, that didn't even get overbought. It just about did there, almost did there. I guess you could say it did, but certainly, like, the ones where it's clearly overbought, here, there, 4 times over the last however many months, resulted in pullbacks of 7%. This one was 10. This one took a little while. Tiny one, hey? 3.7. And here, it went down the first target. It's like 3.3%, which would be the smallest out of them. That one would be kind of 10%, which is a bit more like that. And I think where we're overbought, we're certainly more overbought than there. We're not as overbought from there. So I would say, you know, maybe in there would be like the statistical target. I'd say somewhere in there, around about 4,400. At the moment, that would be the statistical target, 6.5%. There we go. So that's US. So really, I haven't had a position this for a little while. Nothing going on there, really. In the bonds, I've been short the bonds, short the long end. I've been short like the 10 years, the 3 years, the 2 years in the US and the Aussie market, kind of varying. And we can see that we really are at, still are at quite a key level. And I really think that the equity market, it's all about the bonds at the moment, really. I mean, and that comes down to, you know, the inflation numbers. I think PCI is coming out tonight. I still have my eye on a target around here, you know, around about 3%. And that would, you know, that would be a bit of a, yeah, see, right on there. That's like a, you know, that move legging up, and I guess that is not dissimilar to the leg here. Right, that was a 1 for 1. 1 for 1. A 1 for 1 here would take it to 250. 3.3. Given where inflation is in the States at like 5%. Given that they really want it around about, you know, 2.5%, 2 to 3%. A long-term bond rate of somewhere just north of inflation does make sense at about 3%. That would be quite a strong move, and would be a shock to the bond markets. The other one I've been looking at is gold. Gold's an interesting one, right? These lines here, these correspond to some key moments in the 2-year bond market, right? When gold peaked here, right, in basically 2020, that is when the 2-year bond rates bottomed out at 0.1%. When it peaked here, right, at, you know, $1,800, $900, that was when the 2-year bond rates bottomed at 0.16%, right? This point here is when bond rates started to move up. They ticked up noticeably. Here is the high, the peak in the bond rates, like 2.93, and you can see that after all this big, you know, chunk of, you know, sideways action, you know, really through here. I mean, this is kind of poorly drawn, right? Kind of went up, came back, had this last look around about here, and then it was off to the races, right? That coincided with the bond rates peaking. They peaked, gold rallied, right? They bottomed, gold sold off. Back here, this was like a peak in the gold, in the 2-year bond rate, when it had a couple of goes where it peaked around about like 5.2%, and you can see the little pattern that gold made here. And when the rates started to tumble, gold took off, right? So we've got a peak in the bond rates, they start to turn, gold takes off, and it keeps going until the bond rates bottom, hangs around there, the bond rates start to move, gold sells off, right? Gold sells off until the rates peak, and as they start to drop, it comes back. And here, these dates here, like back in February at the beginning of the year, and again like in May, that's when the bond rates started to move. So we can see here, right, that the real thing to watch on gold is these 2-year bond rates. These are those lines that are matched up, right? So that was that little flag that gold had created. There was in 2006, there was like the bond rates peaked. They came all the way down, right? To 2011, that's when gold peaked at like $1,900, right? This is when it started to come off, right? So that's that little pattern in there. And this, of course, that was the run up, right? 2.9%, the run up to where we have been, and this was the peak, and we've had another little pattern, right? So if we look at, the patterns here, you can see them. If I can just draw them quickly, here there was a little flag, right, where gold started to head up, right, at this point in time, right? At this point in time, we'll go back to the other chart in a moment, right? There was a pattern that looked like this, right? And of course, what gold did was it ran up, okay? And then it sank, okay? Sank down there, right? Then in here, this little pattern in here has been the same one where it's been a bit, well, I think it's been a bit of a topping pattern, a bit like that. And of course, we had a good, as bond rates went down, we had the good run up, right, in gold, right? And then here we've just had a little sell off. So the thing is, right, if we're going to see another rally in gold, right, gold rallies when the rates drop, right? When the rates rise, gold drops, right? When the rates dropped, gold rallied, right? So let's go back to the other chart, right? The actual gold price. Because there's a lot of people out there saying, mate, gold, it's off to the races, right? Yeah, okay, sure, it might be. But this is not what it tells me in terms of gold and interest rates, where we've seen gold rally, right? But interest rates, they dropped from 5.2% to 0.16%, right? And again, here, this whole move up was interest rates dropping. And this was a bit of a pause where the rates kind of went up and then it went down. In this one, that's when rates started to go back up. And here where they started to turn, just as the rates started to turn down, gold ticked up. And you can see here, this was the ding-dong high in gold and the ding-dong low in rates. And at this point in time, this was when, like on the 1st of February 2021, and then the 24th of May, those weeks, you can see on the other chart when we go back to it, you can see there's a gold price tick down, right? On those two lines, we can see the US 2-year bond rate ticking up, right? Okay, that was the low. We just see it in here. See, it just starts to tick up there, and here, just starts. It ticks up there, literally it's like a week or two later, right? It ticks up there. So that is the MO for gold. So with this move, I'm surprised that gold has been hanging in there, and I am wary of a continued move here. Could see gold tank pretty badly, pretty quickly. So that's the bond markets and the gold markets and the equity markets. In the currency markets, I got short the Aussie again up here. I've been writing it down in and out a couple of times. To me, it still is a bit iffy, right? As far as where it's going to go. There is, if I can get this thing going, there's a bit of a channel here. Bit of a channel there. Let's go to the candles, right? You can see it a bit better there. It's a bit of a channel here, and so that was where I shorted it. It was like 75.20 bit at it, and that's because I saw it hitting this line, saw it at the top of this channel. It had broken here, and on the dailies there was a bit of negative divergence, and on the 4 hourlies it had been overbought. Right? Been overbought up there. So that's why I shorted it. So still short, waiting for it to, I think the way I see it, natural move would have been for it to lose like a couple more cents there. He's having a bit of a rethink though at the moment. And in the Aussie market, Aussie equity markets, similar to the Aussie dollar, it still has been struggling to break higher. I was short in here, picked up like 100 points, which was nice. Had another little stab at shorting the other night, but it just got chopped around. So short, it got stopped out in the middle of the night when I got the phone call. And I'm just going to sit tight and wait for inflation here. So that's it. So I'm short the Aussie dollar, short the bonds, the Aussie 10 years, the Aussie 3 years, the US 2 years, short gold. They're all kind of like all similarly aligned. But those positions will really come good if there's a de-risking moment in the S&P, which, you know, it's looking very extended here. I mean, that is very extended. A pullback to there is totally expected, right? And that's not that far, right? Like what, a few percent, 3%, could do that in a day, right? I suspect that there is quite a risk of that coming back, but having said that, certainly like a 4,800 target is on the cards. Look, that's pretty much it. I might have a quick look at old shitcoin over here. Just for a laugh. Let's look at it on a longer time scale. Look at this, right? It's like the three peaks. Boom, boom, boom. Look, so overboard. These pullbacks, 85%. God, what's this one? 84%. Where did this one go? This one go like, we'll put this, if it went to 80%, that would be a great technical level. Down at 12,000. Look, you know, who knows where this thing's going to go? But I think this is a symptom. It's the canary in the coal mine for the market, saying like how seriously ludicrous things are. You know, it could go on this chart, on a technical, it'd go to like 250 to 300,000, right? Quite easily on those levels. And it does have a bit of a technical behavior to it. Like, you know, this, where it kind of hit a level, came back, had another couple of stabs, broke against the parallel line, which is, you know, or the horizontal line, which is normally what they do. Came up here, similar run up, wound its way down, had a correction to the downside, scooped up here. That pattern's same as the one here, had a run up, held the horizontal line, which it then broke down, little scoop, and then ran up. Again here, the horizontal line it broke against. This one, you know, it's looking like it's, you know, breaking against that horizontal line. To me, that looks pretty bullish, I have to say, with somewhat with a degree of hilarity and reluctance, I guess. But you know, failing at forming a double top there, this is looking like it could go fair way further. Insane. For some, it's basically worth nothing. Unbelievable. My God. Look, that's pretty much it. Tonight really is watching inflation, which is going to come out any minute, and we'll see what happens. Okay. All right. Have a good one. Ciao.